Why would you say tech is underperforming in recent weeks?
Morning, Seema. I think it has to do with the reacceleration in interest rates, both the short end of the yield curve and the longer end, because we've seen a pretty tight relationship over the past couple of years, or at least beginning late last year with the rise in rates and markets taking more of a finer tooth comb through tech because of the higher valuations in tech relative to other parts of the market, therefore making it more sensitive to changes in interest rates.
Yeah, there seems to be this inverse relationship between growth stocks and yields. So is that just the playbook then going forward? If yields rise faster than expected, you have to be a bit more cautious about owning growth sectors like tech?
Well, I think that helps to explain the selling up until recently. But I think now investors are now beginning to question, okay, what's the slowdown in economic activity going to have on these tech companies? Because we're realizing that tech is not immune from a global slowdown. Tech is not immune from this short strength in the dollar. In fact, technology probably has the most sensitivity to the strength in the dollar because it's the most international in terms of where they do their business.
Yeah, the dollar now at a 24-year high against the yen, a 20-year high against the euro. I mean, these are just historic milestones. How much stronger can it get, Peter?
It is pretty amazing. I think the markets are trying to sniff out when the Fed will begin to slow down the pace of rate hikes. I think if at their September meeting, if they go 50 and 70 instead of 75, and the ECB, for example, this week goes 75 instead of 50, I think that could be enough to slow down this rally in the dollar. Because from what I see, it seems that the rally in the dollar is mostly an interest rate differential thing. It is the Fed that is more aggressive than all these other central banks, particularly the Bank of Japan. And that if the Fed starts to blink and starts to get worried about over-tightening, that will be enough to slow this rally in the dollar.
A quick word on high yield. We're seeing a bigger sell-off there than broader market. Is that a cause for concern?
I think it is. And I think people also have to watch not just the high yield market, but also the leveraged loan market, which is also sort of part of that universe because of this dramatic rise in interest rates and worries about cash flows because of the slowing economy. And it will be reflected in those bond prices.